This is your LMAX exchange technical update for Wednesday, September 13th, 2017. Euro dollar. So the euro is right now correcting a minor correction off the recent plus 2.5-year high that was seen just this past Friday at 20.91. At this point, we would need to see a breakdown below 118.24 to take the immediate pressure off the top side and suggest that this market could be prepared to see a more significant correction. Until then, there is risk for a continued upside here, up beyond the 20.91 high and towards the next measured move extension at 123. It is worth noting, however, that weekly studies continue to be extended, which does suggest that additional upside could be limited now in favor of a more significant bearish reversal. But again, we need to see a breakdown and close below 118.24 to get the bearish prospect, or at least the short-term bearish prospect, going. Sterling dollar. So cable, as we had warned, has traded back up to take out that 2017 high at 32.68, trading up just above that level up towards the 133 handle ahead of the latest minor pullback. We had suggested that the market may trade back up to take out that level, but still might have a hard time holding above the 132.68 to previous 2017 high, deferring to a continued kind of sideways, more choppy trade before it really gets ready to see that next big push up towards the 135 to 140 area. What is clear is that this market has seen a bullish breakout back in April above 27.75, which had been a very important range high, and that breakout does suggest that we've seen a longer term low by that October 2016 plus 30-year low in the 118s. And so the bias here continues to favor the top side, but there is risk right now that we see more choppy consolidation before we see a bullish continuation. Dollar yen. So dollar yen has seen a nice recovery in the early week, with the market reversing course to take out last week's high after initially looking like it could be ready to trade lower after closing below 108 in the previous week. But at the same time, the market continues to chop around down here, and while it holds below 111 on a close basis, there's risk for another topside failure ahead of the next drop that could take us back down below those recent lows that we're seeing around 107.30. Euro Swiss. Euro Swiss hasn't done much over the past several days, with the market confined to a consolidation, but overall this is a bullish structure now since breaking back above 112, and this sets the stage for the next major upside extension in this market beyond the recent highs that were seen at 115.40 and towards the 120 area further up. Aussie dollar. Aussie has seen a breakout to fresh plus 2-year highs up to 81.26 thus far, and the market could be poised to extend those gains up towards the next measured move here around 82.50. At the same time, if we do see the market stall out here after being unable to really establish a close above that previous high that was in place at 80.66 from back in July, it could set the stage for a kind of double top and break to the downside below key support, which comes in at 78.08. So right now, key levels to pay attention to are 81.26 above, and maybe some recent support that was seen around the 79.65 area. Dollar CAD. So dollar CAD looks like it could be poised to put in a bounce here after the market had traded down towards a major psychological barrier at 120. Overall, this is a market that's been in an intense downtrend since May, trading down plus 10%. And so the idea of a decent correction should not be that far-fetched. And with technical studies a little bit extended, there is risk that we see a bit of a bounce over the days and weeks ahead, potentially all the way back above 130 before this market considers its next move. Kiwi dollar. The New Zealand dollar has seen a big pullback since trading up to a plus 2-year high at near 75.60. The market has been very well capped historically up around those levels, and so there could be another topside failure up here, with the market now, this rebound that we're seeing out from recent lows at 71.32, suggesting a potential for a lower top below 74 ahead of the next downside extension below 71.32 and back towards the 2017 lows and range lows in the 68s. SPX 500. The S&P 500 has finally continued its run, breaking to another fresh record high up above 2491, and this could of course set the stage for the next major upside extension here well above 2500. At the same time, if the market is unable to sustain gains now above the 2500 level and sees a reversal, we could see a more significant bearish structural shift. Of course, we need to see at a minimum a break back below the low that was seen back on the 21st of August around 2417 to confirm the possibility for the onset of a more significant correction and a structural shift. Gold. So gold has been very constructive over the past several weeks, breaking out above some key resistance that was the previous 2017 high around 1300, and this sets the stage for a move up towards the 2016 high at 1375. Look for any setbacks now to be well supported now into the 1300 area with a higher low sought out, ideally around that level, but the market ideally holding above 1260 in favor of a continuation of gains towards a retest and break of that 1375 2016 high. But only back up below 1200 would really compromise the constructive outlook for gold.